Welcome, everybody. Thank you for being here with this virtual conference. Kind of weird talking to a screen, but, and you may be wondering, the title, More Beer, Less Swindle, Fraud and Internal Controls. Why on earth are we talking about fraud and internal controls? We do beer. Well, trust me, I do beer too. So, but we'll see kind of as we go through here. I've done so many of these presentations in my career. It's kind of fun to get more information to people to see how these types of things might be relevant to what you're doing. So we'll talk about that as we go through the presentation today. So let's talk about why we're here. So we're going to talk about what exactly are internal controls, why are we talking about them in the first place, why are they important. We're going to talk about some real life cases and underlying issues, and I guess I should back up a little bit from an intro perspective. I work for a CPA firm. I'm an auditor by trade, so I deal with a lot of different industries across the board, from nonprofits to governments to private companies. And about 8 years ago, it became pretty evident based on some information that I was getting throughout the community that there were some issues going on with just some fraud that was going on. And it seemed to be, you know, kind of becoming more and more prevalent the more I was looking into it. And I ended up getting contacted by a number of different folks to see if we could help them out on the side of figuring out if we could find that if their employees were actually committing fraud, if we could help them quantify it, especially in the event that they wanted to press charges or pursue restitution. And so I decided to become what they call a certified fraud examiner. And as part of that, that was 8 years ago when I became certified. And since then, I've been involved in a number of different cases, which is really interesting to go through some of the underlying issues and just talk about those, because really what we're looking at is when we're dealing with information that we're trying to make decisions on a daily basis from a business perspective, we want to know that the information that we're looking at is correct. And so what we'll do after we look at those cases, I can talk about them in generalities. Most of them have been prosecuted and or action has been taken and those cases have been closed, so I can talk a little bit about them, not necessarily in detail, but just kind of give you kind of a window of just common themes that I've been seeing in a lot of those. So it makes for an interesting discussion. We can also look at some questions to ask as part of, you know, if you're looking at financial information or you're relying on financial information, does fraud pertain to me and my company? We can look at that, and we can go through a couple of tips to keep your internal control strong. So we'll go through all of those, and feel free to put stuff in the chat if you guys have questions. But a caveat before we begin, this is not meant to be what I have in here in quotes, a blueprint for fraud. And this is based on feedback that I've gotten from different folks that have been part of my presentation audiences. And when I come away with these, with, you know, the underlying causes of some of these frauds that we've seen, the people in the audience tended to think that, you know, I'm giving them a roadmap. Like this is how fraud can be done. That's not what this is meant to be. This is meant to be more of an awareness and a foundation to be able to prevent and detect fraud a little bit better on the backside or on the front side if we're trying to prevent it. And the other caveat that I want to stress is that traits of a fraud perpetrator, they're not universal. There's no cookie cutter perpetrator who commits fraud. So when we talk about certain traits a little bit later in the presentation, please know that just because somebody has a specific trait or tends to have certain characteristics, but does by no means means that that person is necessarily going to commit fraud. So I just wanted to get that out there before we started. So what exactly are internal controls? Why are they important? When we discuss something like internal controls in our world, when people are looking at, when management is making decisions on financial information, it's really in the context of that financial information. And that financial information may not be correct. It may be missing information. It may be you know, materially misstated for some reason. So really, when we're looking at financial information that we're basing decisions on, we need to know that we have pretty good assurance that that information is not only correct, it's accurate, timely, and it's complete. So what we found is that there's two main reasons that financial information may not be correct, primarily due to the two reasons here, which we'll get into in the following slides in a little bit more detail. But that's really what the main gist of this is you want to rely on that financial information. So let's talk first about errors. Now, we all make mistakes. I make mistakes every day. In fact, right before I came to this desk, I made a mistake at my other desk. But the thing that happens when, you know, say a bookkeeper enters something wrong, and if there's no checks and balances in place for that error or that mistake to be caught, then without additional monitoring or some other checks and balances in place, most likely that error, without additional training or correction, will probably happen again. So the probability of that happening again is pretty big. So the thing, though, that I want to point out here that's extremely important is that errors are not intentional. We never intend to make mistakes. We all make them. But when it comes to financial information, the more you can mitigate those mistakes from happening through training, through monitoring, through checks and balances, you know, the better off you are. So again, not intentional. So now let's flip the screen and talk about fraud. Fraud is intentional, so that's the big difference. So anybody committing fraud actually means to commit fraud. It's not a mistake. They have an opportunity, they have a need, they, which we'll talk about a little bit more in detail in an upcoming slide, but here is where it's very important to just realize fraud is intentional, that the person doing it means to do it. The thing about fraud is that there's several different mechanisms that you can put into place where if you have checks and balances on the front end to prevent fraud, that's better than actually having it occur and then have to be detected later. And the thing to remember about fraud too is that the fewer controls you have in place, the higher your risk. If you don't have a lot of checks and balances in place, then you could be missing something that could be occurring for a long period of time. We'll talk about how long each, the median, the time frame that frauds occur before they're detected in just a little bit. But the biggest thing to remember is fraud is intentional, okay? All right, so let's talk a little bit about some statistics. And we're not going to get into technical stuff in this presentation at all. I could, but we're not going to do that. But what I want to point out here is this is referring to the 2020 report to the nations. This is a global study of fraud cases that occur. The Association of Certified Fraud Examiners publishes a report to the nations based on a specific number of fraud cases that they study every 2 years. And so every 2 years this is published. What's really interesting is that their statistics show a lot of consistency from period to period. So every 2 years, I wouldn't expect to see a lot of difference in the top 3 weaknesses of why fraud occurs without being detected or prevented. Lack of internal controls is the highest factor in these fraud cases that are occurring. And what that means is there's either no checks and balances in place, or there could be strengthened checks and balances in place, or there's just not a lot of segregation of duties with people doing specific jobs within the financial cycle of a company. The other two, lack of management review, 19% of the fraud cases that were studied out of the 2,500 plus fraud cases that were studied, meaning that fraud occurred without an additional review process going on from management or somebody independent of the financial preparation. And that kind of involvement. The third one is extremely important because that is always a risk. So we call it an inherent risk in our world, where 14% of the fraud cases that were studied had been a result of an override of existing controls. So regardless of the controls that you do have in place and regardless of how strong those are, if a person wants to override those controls, they certainly can. So typically you'll see that in positions of levels of authority. So for instance, I supervise a lot of different employees, and if I wanted to commit fraud by having them do something for me that they typically don't do, and it's outside of that normal process or outside of that control, I have the authority to tell them to, because that's part of, you know, my authority. And chances are they may not, you know, come back and say no to a level of authority. So that's where that override of existing controls, when we do audits, we always have to look at that and kind of assess that from a risk assessment standpoint and test accordingly to see if that didn't occur. So those are the 3 top reasons for fraud to occur. So another interesting statistic out of the 2020 report to the nations is, and this is typical, this is very consistent from period to period in these statistical reports that are released. Small businesses lose more than larger businesses, and what they define as a small business is 100 employees or less. A lot of Montana-based companies are small, but you can see the median loss in those companies was larger than those in larger businesses. And a lot of that might have to do with just limited resources in smaller companies. Anti-fraud programs are a huge focus for larger businesses throughout the world. And so a lot of that has to do with that preventive nature of those fraud programs going on. No industry is immune to the risk of fraud, and I get that question a lot. When I do these presentations, some participants in my audiences just say, you know, they raise their hand and say, you know, I just really don't think that this applies to me. My company is XYZ, and what I just say to them is you know, it's an inherent risk just by doing business. You're just not immune to that risk. Now, how you deal with that risk and how you assess that risk is very dependent upon how prevalent it would be for you individually. The typical fraud case, again, from the 2020 report to the nations, runs 14 months before detection. And you'll see in some of the cases that we're going to go through in a little bit that's pretty common. Actually, that's pretty short. And this has been shortened, this period of time has been shortened from prior 2020 or prior report to the nations. It used to stay stagnant at about 18 months, so a year and a half before frauds were detected, and that has since declined, which is good, which shows you that either people are more educated about it, they're saying more about it, or they're putting more detection tools into place. Still some more stats from that report, and this is, again, by no means meaning that men are going to just automatically commit fraud, but based on the studies that they did, men committed 72% of all of those occupational frauds and also caused larger losses than women. And you can see the disparity there in the dollar figures based on the statistics and the case studies that they did. So the losses for males were almost twice as much as the losses for women. Now, ironically, in Montana, it's just the opposite. We see more females committing more of the frauds in Montana, at least the ones that we've been involved with. And the frauds in Montana have been a little bit more on the, I don't want to say simplistic, but you know, there's so many schemes that are so complicated, like money laundering and corruption and all of those things that we don't typically see in Montana yet. But with, you know, technology, everything, I just anticipate that becoming more and more of an issue, especially with, you know, the state of the world right now. So let's talk about, this is the only technical thing we're going to get into today, and we'll talk about this a little bit. Just this is what we call in our profession the fraud triangle. And the theory behind this particular depiction is the fact that in order for fraud to occur without being detected or prevented, 3 things have to be in place. If any one leg of this triangle is broken, then fraud will more than likely not happen. The first one we're going to touch base on is pressure. So this is basically something that you know, management of a company can't control. This is based on an individual employee pressure, and what that pressure is just an individualized, personalized pressure that they're feeling. It could be anything from marital problems, going through a divorce, financial difficulties, perhaps medical bills, addictions, pressure from other people to live a certain standard of lifestyle. Whatever that pressure is, it's a non-shareable need on the basis of the perpetrator or the employee, and the employer can't control that. The other piece, so let's say the pressure is in place for an employee. The other piece that has to be in place for fraud to occur without being detected or prevented is rationalization. And that, again, is something the employer cannot control. The employer can control whether or not, this pressure is so bad that this person can rationalize away what they're about to do or what they already did. And a lot of times this rationalization comes in the form of, I'll only do it once, I'll pay it back to the company, I'll never do it again. And then what happens when they don't get caught, it just kind of continues to go on in a cycle, and it just continues to grow. Another rationalization might be, I'm doing the job of 5 different people and I don't get paid enough. Montana doesn't see a lot of good wages all the time. So that's a very common rationalization. And so those two, again, are ones that the employer themselves cannot control. That's all based on the employee and whatever's going on in their current life. The piece where the employer can come in is that opportunity piece. So let's say we have an employee who has access to cash or credit cards or what have you. They have a certain pressure, or they want to buy a certain car. I don't know what the situation is. They're able to rationalize it for whatever reason, and they have an opportunity. They have access to cash. They're the sole keeper of the accounting records. There's no real checks and balances in place. So the chances of them getting away with fraud without being detected pretty timely is pretty good. So the more you can kind of close that opportunity loop from that standpoint, the lower your risk of fraud would be. Hopefully that makes sense. All right, let's talk a little bit. We're going to kind of break it down into some cases. We're going to talk about how prevalent it is, in Montana. And this, I looked at this study several years ago, so this is old. This may or may not be true still. But at the time when I looked at this statistic, Montana actually ranked 4th highest in the country for embezzlement risk for all types of businesses, nonprofits, private businesses, government agencies. And not surprisingly, which is very reasonable when you think about it, more than half of those cases were employees in positions where they had access to either financial information or financial assets. And most of these folks did it by forged or unauthorized checks. Now, this may or may not be the same now with electronic payments and all of that kind of stuff, but there's still the risk out there, and we'll kind of get into that when we start talking about some of these cases that I've just recently been involved in. So why is Montana at risk that way? We have small operations in general. We have limited resources. We try to make do and do more with less. And sometimes that leads to one employee often having unlimited access, complete trust to financial information, probably financial assets like checks or cash or credit cards or those types of things. Okay? All right, so this was just very recent. I know this one very well because this one was one that we worked on out of our firm here. But this was the headline in the Missoulian just a few weeks ago, and this was a case that had been going on since 2013, I think. So this just recently came to fruition. You can read here that over $200,000 in her time as the board's only staff member was found. She was employed for a little over 3 years, I think, in our findings, and we'll kind of get into that in a little bit. But it's a thing, so it happens all over. So I don't know if you read this in the paper or not, but it happened. So what I like to kind of highlight what the contributing factors were. And again, this is prosecuted, this has been pled out, and so basically here's some contributing factors that are very common, not just to this one, but this person had the only access to the accounting records. There was one computer. There were 7 company QuickBooks files that she was in charge of, but nobody else had access to those records, nor did they really need to have access to the records, as long as they trusted that the information was right. Just due to the makeup of the organization, there were the signator folks on the bank accounts were not present all the time. So when checks had to be written, and they didn't have the electronic payment capabilities set up at this point, so they all did manual checks. So she had access to signature stamps, and so that's one of the contributing factors that was part of this. She had she was the administrator basically on the credit card account, so she had authorization to open credit card accounts. There was no formal monitoring or oversight of the financial information that was being looked at. There ended up being 2 sets of records with conflicting information, which is what triggered this whole thing in the first place. Things just weren't lining up very well for folks, and so they started questioning it. And unfortunately, it got the best of her. But then there was no formal record-keeping policies or review of practices or anything, and not necessarily that means that, just because you have a written policy means that it's going to, make this issue go away. But it at least sets in stone what the expectations are, if there are record-keeping policies or, review of what's going on and what's being done. Evidence was not kept. So what I mean by that is, nothing was kept. We had to kind of recreate everything. The ability to make payments online with no independent review of the underlying statements or bills. And this is basically what I mean by this is they had a check writing process where the signator folks who were approved to sign checks every so often, however often their meetings were, would sign the checks, but they would have no underlying statements or bills to go with those checks. And so they just kind of relied on the fact that checks were being written and there was cash in the account, basically. And so they missed an opportunity to review a lot of stuff because it would have been very eye-opening for them. And the other thing that also happened, which I discovered as part of my investigation, was that they exported reports out of the accounting system exported reports out of the accounting system for the folks that were looking at the financial information to review. So in other words, she was taking what was in the system, exporting it into Excel, and then filtering, basically, for information that she did not want them to see. And nothing tied to the underlying accounting records. And the biggest contributing factor to all of this is she was very, very trusted. She was a very nice lady. I mean, she was a very nice lady, and it's unfortunate that this happened, but they trusted her, and that's what trust gets. So I always say, you've got to trust your employees, but you've also got to verify, and you've got to make sure you're doing your job there. So here's the outcome. Again, this was in the paper. So calving pen she had a ranch. She and her family had a ranch. She bought a calving pen with organization money. She bought some furniture for her house. She bought some tires for a personal vehicle. She bought some guitars and accessories, and a lot more than this, actually. So this is just a little slice of the pie of what she got away with. And it, again, totaled more than $200,000 over 3 years, okay? So here's another case. This person had sole access to the accounting records. She was an employee for 20 years, and this particular entity had a high volume of cash transactions. Excuse me, I got a cough. That's choking here. This particular entity dealt with a lot of cash. This person, again, female, had an office in the back of a building where nobody went. So all of the activity happened kind of in the hub of the building. Her office was kind of back in the back where nobody went unless they had to access another building or part of the building. They did have a safe because, again, they had a lot of cash coming in and out, but there was double counting of the cash that was going into the safe, so there were a ton of different controls going into the safe, but she was the only one that controlled the stuff coming out of the safe. So nobody was helping her double count it coming out. Nobody was verifying that that money going into the safe was actually what got deposited into the bank. She also had access to credit cards. Those credit cards had cash advance options, which I think, you know, whatever setup option you have as a company, I think those are available. So that's not that big of a deal in terms of having that option available. It just depends on how you monitor those, I guess. She had the ability to make payments online, just like the other person that we just talked about. And again, she also exported reports out of the accounting system for review. And she was very well trusted. She was an employee of 20 years, so she had access for a very, very long time. And the reason that this was caught was actually the management of the organization called us up one time and just said, you know, our cash position just doesn't look right. It just looks like it's really going low. And that's kind of where we started looking into a lot of the details that they were concerned about. So here's what happened. Obviously, when cash is available and there's no checks and balances really for that cash, there was a lot of cash taken from deposits pretty much every day, unfortunately. She also utilized the cash advance feature on the credit cards to the tune of probably $30,000, if I remember correctly. And they never saw that because she hid it in an account that never made it to those exported Excel sheets. So she was hiding that from them. Personal purchases on credit cards, she didn't do a lot of that, but it was more on the cash advances that we saw the activity, but there were personal purchases on credit cards. Credit card points that were available as an option on the credit cards were redeemed for her personal purposes, not a lot, but there were a couple of things that were shipped to her personal residence. And remember, she was there for over 20 years. They only had us go back for 4 because at some point, you know, that cash is gone. And so they just needed enough proof to go ahead and prosecute. And she's doing restitution now for them. Yet one more. Again, sole access to the accounting records. Now, this isn't one that I investigated, but this is one I have knowledge of. This person who ended up perpetrating the fraud she started intercepting phone calls from their outside CPA. So the owner was never receiving messages. They didn't have voicemail. It was kind of an antiquated, very, very small company where they just took messages, and she would never take the messages to the owner. So the owner was never in the loop as to what was going on. This person used to give full, like, QuickBooks backup files to the outside CPA. This person stopped doing that and would not give the full accounting information. She would just feed like piecemeal reports. It was like pulling teeth, I guess, to get that information. She ended up, she was responsible for payroll, again, kind of the sole accounting person. So she ended up padding her time by adding holiday and vacation hours with no approval. And actually, they didn't even have a vacation policy. Holidays were just added here and there. She gave herself an unapproved pay raise, and what that ended up doing is making her salary expense pretty consistent from period to period. So just in looking at those numbers, a red flag probably wouldn't be, you know, triggered until you started looking into the details. She also was able somehow to inflate direct deposit amounts. So even though her paycheck should have been, you know, X, she was inflating it to Y and getting paid a little bit more. She was also, in a couple of instances, writing payroll checks in addition to getting paid direct deposits. So just kind of a lack of monitoring on the owner's part and management's part. She had access to company credit cards with no review. And so my question was, well, how, how on earth was she able to reconcile all of this information and get the bank statements reconciled? Well, what she was ending up doing is she was changing information that was already recorded in the system to match the amount she had taken, so kind of making up that difference. And so, for instance, the owner at one point kind of just brought to my attention this cleared image of a check that was written to a specific vendor for $30, and it was like for licenses and fees, and that was what was recorded in the system, or that's what the check cleared as. And when we pulled up the information in the actual accounting system, the check number was the same, but the vendor had been changed, the account number had been changed, and the amount had been changed. So she was changing information in the system to match and kind of cover up what she had taken. And again, this is a person that was really, really trusted. So she was babysitting the owner's kids, and she was just really nice lady. I mean, I hate to say it, but just totally nice lady. She got away with more than $60,000 over the course of 3 years. The difference between the first person, the Cavington person, who committed fraud right away, we found that she was employed and she did it right away. This person actually waited a little bit more, so she didn't do anything for the first 3 years. The unfortunate thing is that she had been convicted of fraud previously, but the owner did not do any background checks before she hired her. So had she done that and done her due diligence there, that would have come out. So just kind of a note to self, I guess, there. And finally, this isn't one that I was involved in, but this was also in the paper. Neptune Aviation had a fraud happening a couple of years ago where an employee got away with about $10,000. And she had been doing it for, about 18 months, about a year and a half. And so that doesn't seem like a huge dollar amount, but to small businesses, that could be a huge, huge issue. And how she was doing it is she was using company credit cards and ordering personal Amazon orders. You can see kind of the composition of what she was buying in that last bullet point. But how she was doing it without getting caught right away is she would take the receipts from Amazon and alter them via Adobe PDF. We all know we can edit PDFs pretty easily. So she was doing that. And I think an internal investigation happened there where the folks were comparing the Amazon charge receipts to what was turned in for payments, and there was this discrepancy there. So that's how she was caught. But very interesting stuff. And the thing about it is there's so many different schemes that can happen. When you talk cash receipts, that's anything, if you receive cash in the door, if you've got, credit card payments where credit card numbers can be, absconded or what have you, checks can be diverted, any type of scheme, if you will, for cash receipts. But that's basically just intercepting money coming in the door and using it for personal use. Cash disbursements, kind of the opposite. This is where money going out the door is diverted to personal use. We see sometimes maybe some ghost LLC or like shell LLCs or shell companies being set up and payments being diverted to that shell LLC that might be owned by an employee who's intending to just pay themselves, for lack of a better term. Fictitious employees, we call them ghost employees. So this would be somebody who's responsible for payroll is able to set up somebody who doesn't exist and then funnel the money to themselves that way. Padded timesheets, we already kind of talked about that, but that's like, adding additional hours that you don't work or that sort of thing. Unapproved pay raises. And the big thing here on the last bullet point, I really do want to stress this, like if you're looking at any types of reports that come from an underlying accounting system and they're in Excel form, just be aware that there's risk there, that they could be hiding information. I'm not saying by any means that they are, but the only other caveat that I can say is that they can filter that in QuickBooks as well and hide it just as easily. So if you're a company that uses QuickBooks, then make sure you understand how those reports are filtered, because it's really, really easy to filter off the accounts that you don't want folks to see, and then you just give them the reports with those filtered accounts. So just make sure that you're aware of that, and maybe kind of do some sniffing yourself. This is really interesting, again, from the 2020 report of the nations, how is fraud detected, and most often it's by tip, and most of those tips are from employees. We're seeing more and more companies put into effect anonymous third-party hotlines, whistleblower hotlines, if you will. So our company uses one. We are able to call in, report any tips that we think of wrongdoing. It doesn't have to be fraud. It could be just ethical violations or safety or what have you. But that's really interesting, because most of the time, being an outside auditor, when I come in and audit companies, most of the time people think that we're there looking for fraud, and that's not what an audit is for. So it's really interesting that this is how most of the schemes are detected. All right, so let's just talk about a few questions that you might ask yourself in your company, or if you know of other people who this might be relevant for. You just need to make sure that you understand what processes and procedures and controls are currently in place, and then you kind of got to step back and go, okay, what can go wrong based on this whole cycle of financial information? What can go wrong if we don't have controls in place? And so you kind of start from that top-down level and ask yourself some questions. What processes are currently in place to monitor our employees? Do employees have credit cards? Do they have expense reimbursements that they get for work-related expenses? You know, kind of what's in play there in terms of the processes and controls that are currently at play. How many bank accounts are there? What are the controls and processes over these accounts? And that comes into play where, you know, if you've got one person specifically doing the check writing, the cash receipts function, the bank reconciliation function, and nobody else is really involved in that, or very few people are involved in that, then you got to kind of understand what can go wrong along the way. Are there acknowledged written policies or procedures over employees' responsibilities? And are they, you know, consistently enforced from management and communicated to the employees, so that they're constantly being reminded of what their responsibilities are? How many employees are there for major processes such as cash disbursements or the accounts payable cycle, or whatever you want to call it? There are ways to segregate duties with as few as 2 employees, so there's never too few people to be able to put checks and balances in place. Are your employees or are employees being monitored? And more importantly, are they being told they're being monitored? So that's one of the most important things, that, you know, from a preventive standpoint, even if the monitoring is actually not taking place, if employees are being told that they're being monitored, that kind of sets into motion a little bit more caution on their part. Are monthly bank and credit card statements being reviewed? What transactions are really going through that bank and credit card account? You know, the Cavington case that I was talking about, if they would have really closely looked at the transactions coming through the credit card accounts, that would have been caught a long time ago. It was very evident when we got our hands on those that there was just something not right. So just making sure that that's, you know, a thing that you've got on your radar. Are all transactions properly approved? Do employees have access to signature stamps? And if they do, how is that controlled? You know, I was the sole employee of a construction company several years ago, and my owner was never in the office, and he had a signature stamp that sometimes I needed to do, you know, checks when he was gone. And he had it in a drawer that was lockable, but he never locked it. And even if he locked it, I had the key. So all of those controls, thank goodness I was, you know, an honest person, but had I wanted to or needed to, I could have just taken the check and stamped it for myself, and he would never have known. So just those types of things are just questions you just need to ask. How many credit cards are there? Who can open those credit cards? Who can set the limits? Are employees required to submit receipts with their credit card statements or expense reimbursement reports? Are employees allowed to make payments online? And this one, I think I kind of alluded to it, but this is an issue in a couple of the cases where they had the normal they paid bills normally through the check writing process. So that was their normal process with, every check, with every statement, every invoice, what have you. But the credit cards were also online, as most are, and the ability to make those payments online rested with that person who had control over the accounting system. And so what would happen in a lot of cases is, if there were thousands of dollars of charges racked up on those credit cards for a particular month, this person would pay some of that down online so that the check wasn't a huge dollar amount, just to kind of keep that off of the people's radar that were signing the checks. Okay, who reviews credit cards? Does the employee reviewing these cards also have a card? And if so, does someone different review his or her card? So, I know we spent a lot of time and I have a lot of questions on credit cards, but that is one area that has been a huge issue for a lot of these different cases that we've been working on. Okay, just some tips, making sure there's controls on who can authorize credit cards, who can change the limits on those. Check in with your financial institution or whoever's issuing your credit card to see if there's some sort of dual approval. We have an online process where I can review my stuff, submit my receipts, and then somebody else has to finalize it and review it. And then, if possible, if you have the resources, making sure somebody independent of your credit cards or your bank statements is receiving those monthly statements, or at least looking online to see if there's anything out of the ordinary that might trigger something that just doesn't look right. Card limits, low as possible, increase those only as needed. Require current receipts. This is true for both credit card and expense reimbursements. A couple of things there. We found a couple of instances where, let's say that as an employer, you have a direct billing arrangement set up with a hotel from a lodging standpoint. So an employee goes to that hotel, checks out, gets a receipt that is direct billed to the company, so the company pays for it, but then turns in that receipt and gets reimbursed for it. So there's that risk there. And then also making sure that you're watching for if you've got credit card reimbursements or credit card statements or expense reimbursements primarily. But let's say an employee goes to a meeting and charges, a meal, legitimately charges a meal, gets both the detailed and the summary slip that comes for the credit card, and submits both of them at different times. So they might submit the detailed one first and then submit the summary one with added tips on it, so that total isn't the same, but gets expensed or gets reimbursed for that expense twice. Lead by example, let employees know they're being monitored, question unusual transactions, watch for the addition of new cards, cancel and shred cards when employees leave. And this actually happened to me when I was working for that small construction company. I was responsible for paying the bills. We had gas cards. He had a fleet of trucks that had gas cards associated with each truck. And probably about a year after I was through this process, I finally said, who's this truck number? I don't recognize this. I don't see this in our fleet. And that's why it took me that long to figure it out. And he said, oh, that person hasn't been here for a while. So apparently nobody was looking at that. So we had to cancel, get rid of the cards and start over. Limit online access to only those employees who need it, pre-approval on large dollar expenses, those types of things. And in conclusion, you want to trust people, but you also just want to ask, you want to monitor, you want to verify. And that's all I have. I don't see any questions, but does anybody have any questions that I can kind of answer in terms of theory and why the heck we're talking about this when you guys do beer?
Yeah, thanks, Jan. This is Jonathan from the MBA, and I really appreciate this.
Mm-hmm.
I think we always want to trust our colleagues and our employees. So this is very enlightening and important for us to hear this. I think as our member breweries are using cash, what tips do you have for accounting for cash receipts? Any simple tips?
Mm-hmm. And you said cash, sorry, you're breaking up, but you said cash receipts?
Yeah, for cash receipts, yes.
Yeah, so I mean, just kind of think of just the different monitoring controls you can put into place. And, you know, there's got to be a way to verify somehow what's coming in is actually what's going in the bank. And so, you know, there's, depending on the accounting system that's being used, you know, there's information that can be captured there. But the one thing that you can do, I mean, regardless, is just make sure if you don't have access to your accounting system and you're relying on information that somebody else is producing, don't be afraid to go in there and poke around and look at certain reports that can show you, you know, maybe an audit trail report that shows every single change that's made to a transaction. You know, cash is a little bit stickier or a little bit harder just because, you know, you have to have controls on you know, coming in and actually what's going into the bank. And a lot of times that's really hard. But, you know, just kind of think through that in terms of where you can kind of close that loop, and you'll be better off by doing that, if nothing else, than doing nothing. Anybody else at all?
Jan, I do have one more question here. You know, our brewery managers and owners, they're so busy right now with sales and sanitation, the two S's. If you could give them one suggestion that is time efficient, what would that be?
From a control standpoint?
Yeah, from a control standpoint.
Ask questions. Just ask questions. Look at information and ask questions. That's the biggest thing. You know, if you're not in control, if these particular people aren't in control or don't have access for, you know, to the underlying information, ask questions. Just start asking questions so that they know you're looking. That would be my biggest thing. Anybody else?
All right, Jan. Well, thank you for your time and this information. It's invaluable. So thank you for participating today.
All right. Thank you so much. I appreciate it. Everybody have a good day.